Next week is going to be a little interesting, just to let you know. I'm going to pretend like you're all my clients by Zoom or a prospect, and I'm just going to run the application, that my appointment from kind of beginning to end, as if you're my clients, but I'm also going to stop and explain why I'm asking it, my thought process behind it. I very much am a believer in explaining why. If you understand the why of something, then you can make the decisions of when you need to do it, how you need to change it, adjust it. My training program that I created that you can get that's why I did it, because I want you to understand the why. So that'll be next week's class. Lots of people joining. This is a topic that's come up quite a few times, protecting clients. I do tend to use the same terminology, assuming people know what that is. If I do say something that you're like, what? Absolutely ask. I'm glad lots of people asked me, what did I mean when I said layering? They watched my YouTube videos and what do you mean by layering? What does that mean? So that's partly what this is about, but this is layering a very specific demographic. But if I've ever saying something that you're like, okay, I don't know what she's saying, shoot me an email, ask me a question, send me a chat on Facebook. I typically am not on Facebook during the day. I am on in the evenings a little bit more, but if you've got a question, let me know. Any industry you're in, we tend to use the words that everybody uses and think everybody knows what we're talking about. So this will be about layering, particularly layering for people who wouldn't pass underwriting, but I'll explain that too. More people just clicking the button. So I'm going to show you today, I'm going to show you 3 different carriers for underwriting, or that have product that don't require underwriting. There are more that do require underwriting, and there's probably more that would not require underwriting. These are just the 3 I know. And if you like one of these companies and that's what you want to do, you don't have to do 3 different companies. I kind of feel like one of the best ways is to learn one thing, get good at it. Okay, I understand that one. Now let me add another one, because you can confuse yourself. You start going, wait, which product by who was I talking to? Which one? So any of these will work. And then you can go, all right, I want to look at a different company's products. And maybe they're better. Maybe they're just different. Or maybe they're not. And what you're selling is perfectly fine. So don't feel like you have to do all 3 of these if you don't want. If you do want to, absolutely do that. If you've got a different carrier company that you work with that has similar products, feel free. But this is just for people who have been asking me, how do I protect people who won't pass underwriting? So in the past, on previous things, I've talked about layering. So layering is, I used to throw out a picture of cake. And I would tell people, I would tell my clients, all right, we're going to build you a cake. How many layers of cake you want? It's up to you. You want a 1-layer cake? We're good. You want a 20-layer cake? Okay. It didn't really matter to me what they wanted, and cake, everybody likes cake. So it was an easy diagram. So think of 1 layer as the main insurance, their health insurance. Now it could be Medicare, it could be ACA, it could be group, it could be a short-term policy. So it's the main health. That's your just 1-tiered, 1-layer cake. Layering is adding all the extra stuff that will protect them. It will help pay their out-of-pocket. It'll help cover the ambulance. It might cover the ER or a cancer diagnosis. So that's when I say layering, that's what I'm talking about. And I can make a 7-tiered cake if that's what somebody really wants, and they want everything, accident and life insurance. And so layering, stacking, all of that are similar. So I think I use layering because of cake, but I'm layering the protections on them. Could be a blanket, right? I'm layering blankets. How cold are you? So feel free to use a visual that people will understand. Because if you heard me say layering and you're like, what? You figure out what they'll understand, right? If you live in the north, we all understand blankets. As it gets colder, we're going to layer the blankets on us. So use a visual that they'll understand. So when I talk about layering, that's what I mean. Or as Joseph said in the chat, stacking. Yep, we do stacking. So the first one I'm going to show you is through Allstate. So I'm going to do a screen share. So my camera, I might be looking down for a bit. The three carriers I'm going to show you, if my computer will work right, is United Healthcare, Allstate, and the new one that a lot of you have been asking about called In Pocket through Morgan White. Number 2, there we go. All right, you should see my screen. So this is Allstate. Allstate has changed the way their layering works. It is now pretty much all guaranteed. Now life insurance is not, but for the most part, this is going to be guaranteed issue. So I've already put in my statistic, the zip code and the start coverage and the name of age of the person. Don't worry about that. That's not what I'm going to focus on. It's just that these are guaranteed. So if you're talking to a client, prospect, and they have a $9,100 max out of pocket, it's going up. It's going to be almost 95 next year. It's going to be even more the year after. It's just that out of pocket's going up, 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 up. They have an ER copay of $1,500. I see that one a lot. Any of that type of situation, that's when these come into play. So Allstate has a fixed indemnity benefit. Now, fixed indemnity benefits are going to cost more because they're going to pay more. A fixed indemnity is really, I think, a great layer for somebody who wants a platinum plan. They want the gold plan. They want to pay more per month and less when they actually use it. So indemnity plans will pay first dollar. So this, if you look right here, the value is the least expensive. It's going to pay for pay you $75 if you go to the doctor. Well, if somebody's copay is $25, they're going to make $50 for that. They're going to give them first dollar is kind of, you hear people say first dollar. That means that there's no deductible. As soon as they use it, they're getting it. They walk in, they get $75. The ground and ambulance, there's no deductible. Hospital confinement, if they're in the hospital because of sickness, they get the first layer here, 1,000, 3,000. If they're in there for an injury, because that typically takes more, there's x-rays and surgeries and stuff, they get a little bit more. There's no deductible. They just get to go in right away. And then you can add the hospital expense. So that adds a little bit more. Office visits, a little bit more, $150 per day, really inexpensive premiums. So these are guaranteed. Now, you might be going, who's going to pay $547 to get $150 when they go to the doctor? And then if they end up in the hospital, it's going to pay $3,000. There are people who will want to. They would rather pay $547 to pay as little out of pocket as possible. But I'm probably not going to offer this to most people. This is really when you are showing somebody a quote and the bronze plan's the best price, silver, maybe the out of pocket's exactly the same. And they say, well, what's a gold look like? And you show them the gold and they kind of want that because they rather pay more and have less people have to pay less out of pocket. But that's what an indemnity plan is. And there's more details in here and you can kind of look at the brochures, and certainly download the brochures and look at it. The one that I like a lot is also from Allstate. It's their plan, their accident with plan enhancer. This is a great, very affordable, look at this, $11 a plan. It's going to cover them if they have an accident. Now, I don't know what your plans look like. Even our plans, and we have some amazing plans in Wisconsin, has a $1,500 copay for the ER. And it's a $0 bronze plan, $0 deductible bronze plan. It's a really good plan, but $1,500 if they end up in the hospital or just walking into the ER is more than most of them want to pay. The least expensive one here is $2,500. It's going to cost $11 a month. I actually am offering this to people in low income with those CSRs. Somebody who's max out of pocket $1,700, can they afford $1,700 if they end up in the hospital or the ER? I don't know. Some of them can't. Some of them $1,700 is a stretch. It's just like $9,000 for somebody who's making $80,000. So they go, oh, for $11, yeah, I'd rather take that. The max benefit goes up, as you can see. So there's 2,500. You can even go all the way up here to 17. And it's only $56. I mean, you know, if somebody's really, I don't know, really active, they do a lot of horseback riding. All right, maybe they want 17. All right, they could. Typically, this isn't going to be used with an ACA plan, 95. I might actually say, why don't we just do the 10,000? Because your max out of pocket's going to go up, especially if they're in their 60s, not 64. If they're in their 50s, it's not going to be that long before 10,000 is the max out of pocket. So let's just get you in at $34. If you add this, click add. This is the reason why I like this plan. It also lets you add additional riders. So CHS, that's cancer, heart attack, stroke. It'll pay a lump sum. So whatever the benefit you picked, whether it's the 2,500 or 17,000, you can say, yep, I want it. And it shows you how much it will be total. So it's not another $81. It's just the total. Sickness and hospital. So now this is a lump sum benefit if they end up in the hospital. Again, whatever benefit you picked. So if you click that one, it's like, yeah, I'll do that one. It'll cost $88. Then you can have both of them. Cancer, heart attack, stroke, plus sickness and hospital. Lump sum for both of them. Pays it whether you're in the hospital or have cancer, two separate things. Or you can say, I don't want any riders. This is because typically, if somebody, especially on the lower income, maybe they're not so worried about the cancer, heart attack, but they are worried about that out of pocket. $6,000 deductible, max out of pockets can be a lot of money. And these are all guaranteed. That's what's nice. If I say I want to add that, now I'm at $122.32. If they're paying nothing and they have a $10,000 accident policy and a $10,000 hospital, they're covered. So it's nice. Doesn't have to be 10,000. It can be whatever you want. So that's the plan enhancer. They do have cancer, heart attack, stroke brochures that are just separate. So if somebody's like, I don't need accident, I just want cancer, heart attack. Those are the bigger ones, you know, 75,000 or 25 and anything between. They also have the term life on here. Dental, just pointing this out because their dental plans are actually pretty good. So if you have a dentist in the area, absolutely look at these because their plans are, the affordability is really good. And Allstate, as you layer, will actually give you discounts. So that's Allstate. Now we're going to look at United Healthcare. So can you still see my screen? I'm hoping. Okay. My complaint about United Healthcare is there's so many options. As you scroll through this, you're like, what? There's just so many. So I talked to them at Allstate because, of course, or United Healthcare, their job is to help agents understand what they're selling. And so if you are ever like, you know what, just narrow this down for me. Look at this, Health Protector Guard. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Like, I don't have time to look at 12, right? I don't know if you've got time. And they won't let you compare them more than like 3 at a time. So they did kind of make it easy. If you look through their options and you see one that says GI, that's guaranteed issue. So if you need something for somebody who's needs that guarantee, they no health questions, this is where you're going to look for. And they're typically at the bottom. So the Accident ProGuard, there's the guaranteed issue. Hospital Safeguard, guaranteed issue has its own entity. And then they've got extra ones. So they're built the same way. They're guaranteed issue. I can kind of show you these plans. They are, and every state's different. So, you know, one state, United Healthcare, might be the cheapest thing you've ever seen. And the next state, it's Allstate. And then the next state, it's, you know, so always look at them. So here's the difference between the two. On the one that requires underwriting, it's cheaper, $26 versus $43.22. If somebody can pass underwriting, clearly do the underwriting one. Right? I mean, $20 is $20. But if they can't, take this one. The nice thing about their accident guaranteed is it will automatically throw a critical illness benefit on there. Guaranteed critical illness benefit right there. And there are accident policies, either 5 or 75, and it will change that critical illness benefit. So there you go. They get a guaranteed accident and guaranteed critical illness, $60.71, plus the accidental death benefit. Just like that. Easy, $60. Same person, I do in the same age. So a 61-year-old on the marketplace, let's just say that the cost for her insurance is $40. Hey, for $60 more, would you like your accident, all of your bills for accident covered, your critical illness, if in case you have that, and accidental death? Why, yes, because I had cancer 4 years ago. People who have gone through chronic illnesses, cancers, heart attacks, strokes, you know, COPD, they understand the importance of having their bills paid. And if there's a family, a husband and a wife, where one of them was sick and one was not, they really understand it. The not sick husband, the not sick wife is like, yeah, I would love to have had this. So don't be afraid of offering this. Don't be afraid to show people, because honestly, they have no idea what's out there. I mean, this isn't easy. It's all right there. Boom, $60. And that's the accident one. There is more. Obviously, like I said, United Healthcare will be happy to explain these to you. There's the hospital guard guarantees. That's for staying in the hospital. And some plans are going to cost a little more than others, but there's a reason. And like I said, sometimes people would rather pay a more per month to pay less out of pocket when they go to the doctor. Here's the hospital guard, kind of just showing you two different ones, 500 versus 2,000. There's a big difference in price, but you're getting $500 a day when you're in the hospital versus $2,000 a day when you're in the hospital. Plus, this is the first day. So you get that first, you know, you went in because you first got there, and then 2,000 per day. There's some outpatient services. So very similar to that indemnity plan that I was showing you. Doctor's office, $100 a day. Doesn't matter what you're actually charged. If your copay is $50, you're going to make $100. There's the 75 for lab. There's x-rays, $100. MRI. Our copays for an MRI in the $0 deductible plan is $1,000. I show somebody this, some of them are like, yeah, I'd rather pay $400. Okay. And this is guaranteed issue, right? Here's outpatient surgeries, anesthesiologists. So there's a little extras in there as well, not just. And then there's some preventative. They're going to give them $200 for getting their wellness check. Now, you can't get it the first month. They're going to make you wait a day. And then there's accidental loss of life. So these are the guaranteed issue plans. I like that. It's one thing to have somebody go through underwriting and pass, great, but the people who have already needed it, these are the ones you're going to look at. All right, I got one more to show you. This is the in-pocket. Are you still seeing that? In-pocket now? All right, I never know when I'm closing screens. So this one has come out. I know lots of people have been getting emails. They are doing some mass marketing on this. I'm very excited about it. North American is an FMO that you can get this with. This is a very different type of plan. Again, if your client can pass underwriting, do underwriting. But this plan covers it. I wonder if I kept that screenshot. So the other plans, if you noticed, are for hospital stays, for accident, critical illness. And then there's a few other things, maybe labs, maybe an MRI. This plan is covering everything that happens at the doctor's office or at the hospital. So it's not carving out just accident. It's not carving out just the critical illness or hospital stay or labs. It's a little bit different. I know people have been coming around, and I will tell you here's my caveat. This is not a good one to mix with HSA. Okay, it's just not a good HSA plan mix. And I'll kind of explain that in a little bit, but this is really good for copay plans. This is really good for those plans that have a high deductible, but have copays for regular doctors and specialists. This is really good for that. It's guaranteed issue, no health questions, covers the pre-existing. If somebody is currently going through cancer treatments and they get this, it will start covering their cancer treatments right away. So it's kind of, I'm kind of fascinated by what is coming on this one. It's a company that has been doing this with group. So they've got some experience. It's not brand new. It's just new to the individual market. The rates they said that they purposely put them where they were, expecting to have some adverse selection, but in preparation of that adverse selection, being able to maintain these rates. So they're guaranteed through 2024 for sure. They said they didn't think there was going to be any rate changes at all till 2025. So not exactly sure what that means, if that means they're going to change them for 2025, but these are going to be some, you don't have to worry about it changing in the middle of the year. All right, let me pull up my screenshots that's saved somewhere. I don't know where it's saved. Well, anyways, so here's what it is. So you pick a deductible. So you can see this right here. It says deductible for 2,000, deductible 1,500, and deductible 2,000. So that's the deductible. And then as you see where it says 4K or 6K. So that's the benefit. So you're picking the max benefit of 4,000 or the max benefit of 6,000. And then what is the deductible? So this is sort by lowest price, but I'm going to sort. So if you pick this plan, now this is one person. If you add a spouse, it changes. And it could be Standard Life or it could be American Family. It's basically the same thing. That's for if you add a spouse and add a child. So back to the same as the other ones. The deductible is 2,000. So it's not going to start kicking in until the client has paid 2,000. Well, if they have a $7,000 deductible and they have to pay the first 2,000, okay, it's happening at the same time. Once they have reached the 2,000, then the insurance pays 100% of the bills until they've reached that 4,000 that they pay. And then it would kick, if they're in the 9,000, let's just say the 9,000 max out of pocket, and they buy this plan, so a 2,000 plus 4,000, it still leaves them an extra. So you got 9,100 minus 6,000. Whoops, not 600. They still have another 3,100 they might have to cover on their own. But you have still cut significantly most of what they have to pay out of pocket. But if you look at the difference between this plan, so it's $100.15, and this plan, $121.90 for $6,000, I Personally, I probably would quote the 6,000 almost exclusively. It's $20 more and you're going to get $2,000 worth of benefit. Now, again, assuming the max out of pocket's 91, not the 6,000 or, 3,000. But if their max out of pocket's 9,100, well, I might as well do the 6. And you can actually have a deductible of 1,000 where it's going to kick in immediately. Okay. It'll kick in, pretty quickly as opposed to 2,000. The price difference is 121 versus 165. The benefit's the same. It's just how soon that it kicks in. We confirmed if somebody goes to the doctor and they get an IV treatment with some kind of weird specialized medicine, that's covered. The 3 things, or basically the 2 things that are not covered and does not apply towards the deductible, is the copay and or just doctor bill for the doctor. For I walked into your office and there's the professional doctor fee. So that's why it works really well with the high deductibles that have a copay. So if they pay the $60 copay for seeing their doctor, all right, that $60 does not apply towards the deductible. But if they have a shot in with the doctor, if they have treatments in with that doctor, if they go to the dermatologist and they give them something, that will be covered, just not the $60 fee. Or that's why it doesn't work really well with an HSA. You go to a specialist, you have no idea what that bill is going to be. They go see a specialist and the doctor bill is $300. Well, that $300 is not applying towards the deductible and it's not going to get paid for because that's the professional fee for seeing that specialist. And it doesn't pay for prescriptions. So if somebody is a max out of pocket person because they have a tier 3 or 4 medication, this is not going to work for them. That's when an HSA, you know what, you reach your max out of pocket every year. Let's get you in an HSA so that you have a smaller max out of pocket and at least you can write some of your bill off for tax reasons. So this is the in-pocket plan by Morgan White. You can get your own portal. I could send this to anybody. They also have dental. They also have vision, which is the VSP and the UVP. They can also buy identity theft and telemed. So you can send this to people. It's got, you put your logo on there, modify the search, change things. So, and I sent something like this to a person and they bought the hospital indemnity plan that was on there, so sometimes you may be sending them this and they may end up going, hey, I like this vision, $14 and it pays for stuff. So it does give you a couple of other things. If you do not have Morgan White and you're looking to get contracted, if you go through North American, you can get, it's the same rate, whether you do it direct or whether you do it through an FMO. FMO, you just have a little bit more fun, but the street level is the same. All right. I'm going to stop my screen sharing. That's the Walmart stuff. Woo! If you're really interested in the Walmart, let me know. All right. I'm going to go back to the questions because I wasn't looking at all of them. So hopefully you don't need those screens because I closed them. But does the person have to be coded as admitted for the hospital portion or can they just be observed, coded as observed? That will depend on the plan. Most of them have started to change to say observation, but double check. It's a great question for the carrier. I don't know if Bobby's on here from United Healthcare. She could say that for hers. Gail, if they use the coverage, will the companies cancel them for claims? I'm not sure what that means. Oh, I will tell you the out-of-pocket one, that the last one we were just looking, the in-pocket protection, is listed as secondary medical. So they go to the doctor and they say, here's my primary insurance and here's my secondary medical. And the hospital is supposed to run it through whoever, and then it comes back and then it gets run secondary through that hospital, that secondary insurance through in-pocket. If your hospital system won't do it, there is ways to submit the claims yourself. But just so you know, that's run secondary. What is the benefit? Does it show the amount? So benefits will be on there. Look at the details of the brochures. It'll pick out exactly what it is that you want. Is it a 5,000, 7,000, 2,000? Those are on there. Tracy, I love the copay 2 plan. Chris, the supplements for UNC, is that separate contract? So I'm assuming you mean United Healthcare. Yes, the UHC, you have to, there's they have so many company contracts. So if you have Medicare with them, you don't necessarily have the short term and these riders, the Allstate, or the indemnity stuff, all that. If you do ACA, you don't necessarily have this one either. So yes, there's different departments. Think of it, you have to contract with different departments of United Healthcare. Oh, there you go. Bobby Joe said accident expense guard is guaranteed issue and is the accident and his accident program. So they're going to put that on there. But yeah, Bobby Joe's on here. She's great. If you need somebody from United Healthcare, they're great. If they want you to understand their product. If a person, can a person apply for the plan, and if they get denied, get the guaranteed? Yes. So if you do an underwriting, somebody tells you that they're going to pass underwriting, and you're with whatever company, and then they don't, yep, you can get the guaranteed. That's the guaranteed issue. So, and we've had people who thought they were going to pass, and we filled out the information, and the insurance carrier's like, dude, you're on 4 prescriptions for blood pressure. That is not good. So no, we're not going to take you. Yep, then you can put them on here. So if somebody, you can even say that in your office. I've done that. Hey, let's run it. Let's see what happens. If you are denied, I have an option for you. It might cost a little bit more, but I've got something for you. Is the UHC accident plan in addition to other insurance? Yes, you should not just have an accident only. You need to have that with a marketplace, a short term, you need to have some other, the chassis, you need to have some other health insurance. UHC has a new critical guard planning coming out in September, which seems bigger and better. Yep, they're always updating, they're always upgrading, they're always making these better. They see what a competitor does and they're like, how can I do that? So always look, whatever company you're contracted with, like I said, it doesn't have to be United, it doesn't have to be Allstate. Whoever you look, always look. But then, you can start looking at some other carriers. Is this UHC any critical illness? Critical illness would be the cancer, heart attack, stroke. Allstate is mostly GI. Yes, they are. Their rates have gone up a little bit, but that's why, because they're all GI on those products. They're not guaranteed on short term. They're not guaranteed on the critical illness. So it's the accident in the hospital. Which company had the decent dental plan? Oh, Allstate. Allstate is a really good dental if they're in the network. But again, it kind of depends on your area. I think we're contracted with 6 different companies that sell dental, and there's kind of a spot for all of them. Is that benefit given to the insured or the director hospital? Do they receive the entire benefit amount or up to the actual bill amount? That will vary. If the hospital submits the bill for somebody, the hospital will get the money. If it's run as secondary, it's supposed to go to the hospital, to the clinic, to the doctor. If the hospital doesn't submit that bill, then, I'm the one who's submitting the bill, the money's supposed to come to me, and then I reimburse, then I'm using that money to pay my bills. These ones, I don't believe any of the ones I just showed you is necessarily looking at the actual charges, except for the last one. That one's not going to give you $100 if the bill was $40. But the indemnity plans, the accident policies, those are not coordinating benefits. They're not asking what was your actual charge. If it says that, like I said, if your copay is $40 for a regular doctor visit, and you have something that's going to pay $75, they're going to pay $75. But that last one it's only paying the bill. It's not paying above and beyond. And it's paying from January to December. So right now we've got 4 more months, we're right at the end, but 4 more months of this year, somebody could actually use all $6,000 benefit of that in pocket this year, and it starts over 1/1. So each of these plans, you're going to have to dig in and look. Is in-pocket approved in Florida? I do not know. They are constantly changing it, but I believe so. Florida kind of lets everybody do whatever they want. So of all the states, Florida is probably the one that it's going to be approved at. And I believe I did see North Carolina. The in-pocket can be expensive, but you're paying, that's partly why I like the 6,000. You're paying about $1,200 or so to get 6,000. And if you're getting treatments, you're not a healthy person, or you weren't healthy, but you're not going to pass underwriting right now. You're willing to pay $1,200 to save yourself $4,000 out of pocket. It's not for everybody. It is a bit pricey, but of course it's pricey. They're going to be paying for sick people, you know, because if you can pass underwriting, you're probably going to go with the other one. But like I said, this one will pay for every bill, not just, well, outside of the doctor, you know, visit fee, while the other ones aren't, right? The other ones are only going to pay for an accident or hospital stay. There is one other carrier that will pay for kind of anything, and that's Philadelphia American Life's gap insurance, but only in like half of their state, and it's not guaranteed. So it is a bit expensive, but it's because it's guaranteed and it's covering everything. So for the in-pocket, if our client tells us they have cancer, I can sell them this product knowing they're going to hit their ACA deductible and this plan will pay out. Yep, absolutely. They're not going to pay the prescriptions. So if they need medication, they need to get the medication done, treatments in the doctor's office, but this is going to pay. And it's going to pay. Now you can't get it starting on 9/1. You can get it started for 10/1. They can start using it right now for the rest of this year, and then it will reset in January. And they get the 6,000 again. We had it too. One of my guys had 2 people, similar situation. Instantly, we're like, their only complaint was, dang it, they couldn't get it to start 9/1 because you have to enroll before the 20th of the month. Now you can do it further ahead, but if you need it for the next month, it has to be done before the 20th. Labs would be covered by the in-pocket. The one thing we were looking at, the hospital guard for United Healthcare, that one had labs. So again, it depends on the product, but the in-pocket will. The inpocket.com availability. Yes, there you go. So inpocketplan.com/availability will show you the states. But he told me they're constantly updating. They're getting those renewed all the time. Are there cancer policies that allow current cancer treatments to be covered? No. You can't get fire insurance on your house after it's already been on fire. This in-pocket is the only thing I've seen that's kind of letting you get some fire insurance while the house is on fire. It's not going to pay everything. Well, you have to have $1,000 out of your own pocket, or $2,000. Well, they were about to pay $9,000. So if I can reduce your $9,000 by $3,000, how's that sound? Thank you, right? People that are sick, if they can pay a little more to have some of their stuff paid, are gonna do it. And I would, I've seen it. You guys, everybody on here knows somebody who's gone through cancer treatments if you haven't done it yourself. It's expensive. Our commissions level for life for the policy. So yes, the in-pocket one is different than the other ones. So the other ones are typical. You get more commission. Don't ask me the percentage. I have no idea, but you get more the year 1, and then it goes down year 2, right? Like 3% or 2% year 3 and beyond. With the in-pocket, it's $30 per member per month. Or $30 for a single person. I think it's $45 for 2 and whatever. So, but it's for life. It never goes down. It's the same rate. So if you have in my state, Molina used to be $15 per member per month. And then I added this, I'm like, well, I'm making $30 per member per month. Okay. So it is for the life of the plan, as long as they have it. And in the long run, if they're younger than like 63, you're actually going to make more money on the in-pocket than you would on the others, with the more at the front end and less at the back end, because it's consistent. But I don't sell products because of the commissions. I sell product because of what is the best thing for the client. If you are interested, somebody asked me about the Walmart, please email Walmart people who are interested at KGEORGE, so kgeorge@na.insurance.com. I'll stick that in there. If you really are interested in the Walmart plan, let me know. This is Walmart for ACA. not Walmart for Medicare. I know nothing about that. There's a whole different thing, and Walmart wasn't happy and they're changing things. So I know nothing about the Walmart Medicare plan. But if you're interested in Walmart for ACA, send me an email to the email I just put in. And they just told me they've also opened Sam's Club. So if maybe you're like, I don't really want to go to Walmart, there are actually some Sam's Clubs available. Those are for ACA selling. If you do sell Medicare, you can probably also sell your Medicare. It just kind of depends if there's a Medicare agent in there. But if you are looking to grow your book of business, I don't know anything faster than this outside of the telecells. And if you're that kind of person, great, you can do it really well. Have at it. But this is face-to-face. You're going to see people. The first wave has already been out there now for 4 weeks, and they're already seeing the sales, significant increases. So if you are interested in Walmart, I sent you my email, just send me an email. If you haven't already signed up, the next round, meaning when you can go out to Walmart, should be in November. So the supplements for UHC, is that a separate contract? Yeah, so Bobby said that there's 4 separate contracts, right? 1 ACA, 1 for Medicare, 1 for group, and then 1 for the short-term and ancillary. Bobby just mentioned the product that's expected to launch September 22nd with United Healthcare. In 31 states will have a benefit amount up to $100,000. So, I mean, they're coming to play. These insurance carriers, we've been around. The United States has had the Affordable Care Act now for 10 years. We're going on the 10th year. They kind of now know what's happening. Things have kind of leveled out. There's been some playing. It's here to stay. They tried to get rid of it. They didn't come up with anything better. And now they're trying to fix it. It's not going anywhere. So the carriers are coming out. They're figuring out. They've got statistics now. They've got those, brainiacs who like math and loves to look at statistics. And so they're coming out with these great plans. How do we get contract with the in-pocket? If you send me an email at that same email, I will get you with that with North American. They've got a contract. I think this is going to be kind of big. It's perfect for the ACA. I mean, it was specifically made for group. And then as the ACA has kind of developed, they went, how do we take this group product and make it for individuals? So as commissions aside, where does the in-pocket fit the best? So to me, it fits the best for people who are already sick or won't pass underwriting, or somebody who really doesn't want to pay any bills. And they don't want to have to do claims. They don't want to have to deal with that, because all the other policies have certain codes they'll pay, right? I'm only going to pay for an accident. I'm only going to pay for cancer. The in-pocket will pay for everything. So it is outside of those professional fees and the prescriptions. So, and I don't know anybody right now that's paying for prescriptions. The pharmaceutical company is doing that. So that's my guaranteed. Now, those are the guaranteed. If you're like, I'm intrigued, there's some for that aren't guaranteed, that pass underwriting, same companies. And then there's Manhattan Life, and then there's Philadelphia American Life, and everybody's got their favorites. And, there's lots of that can pass underwriting. What you really need to do, Virginia, are you asking if the in-pocket, does it work with any doctors? Correct. It's coordinating benefits though. So it needs to be through their insurance carrier. If they decide they want to just go off somewhere to an acupuncturist and their insurance carrier doesn't cover acupuncture, this isn't going to work. It's got to be sent through their insurance. In fact, we asked if the carrier or the company, hospital, doctor, clinic company, won't send the bill and they have to submit the claim themselves, what do they need? They only need the bill and their EOB. I was like, what? No itemized bills? Correct, because they just do all the codes. So they don't have to. The reason we have to submit itemized bills to Manhattan or to Philadelphia or United is because they have to see the codes to know which ones they're going to pay, which ones they aren't going to pay, right? With the in-pocket, you don't have to have codes because they pay for it, but it is coordinated. So it's got to be, you have to have that explanation of benefits and then just the bill. So it's great. Any doctor, no network issue. If it's in your state, you can use it. I'm kind of excited because there is a niche for it. My challenge for you, if you are not doing layering, is to just layer one. This next week, pick something and just tell your clients about it. Accidents are really easy to sell. All right, I'm gonna sell an accident. I'm just gonna show them. Just challenge yourself to present to your clients something besides the major medical. Just something, you know, can be accident, can be critical illness, can be an indemnity plan. Just offer it. You don't have to do high pressure sales. They don't know what you sell. And if you never tell them, they're never going to do it. So I'm just challenging you, just try it, because you'll be surprised. I think you're going to be surprised at how many people will go, I want that. I want that. Because that $9,000 deductible or max out of pocket that keeps going up and up and up has gone up faster than anybody's paychecks. They can't afford it. I mean, you've seen the statistics where, the average person can't afford a $300 to $500 emergency. They're scrambling. So what are they doing when they get 9,000? It's medical charges is still the number one reason people file bankruptcy. And it's not because they don't have insurance. It's because they have insurance, but they still have to pay 9,000. I mean, I had a poor guy, I've told this story before. He had a heart attack on like December 25th, 28th, something like that. Ended up in the hospital for 2 weeks. He reached his max out of pocket for 1 year and reached his max out of pocket for the second year in less than 3 weeks. And he had something like $15,000 that he just racked up in 3 weeks. How much would he have loved to have that in pocket? So, I mean, even if I had sold him a $10,000 critical or heart attack, he still would have had out of pocket. Don't be afraid to show your clients these options. They're looking for options. And don't be afraid to show it to those who are low income. Sometimes the high income people are like, I got money. They're not really thinking, I got money. It's the person who's living from Social Security check to Social Security check who's like, I don't have any money. Give me that $12 accident policy. $20 more for a critical. Hey, give me that. It's one of the things I really liked about the United Healthcare Accident Guaranteed, right? It's relatively inexpensive and it throws a critical illness on there. Don't be afraid to show these to your people. So that's my challenge. And I want to hear if anybody's willing to do it, come back and tell me how it worked. Just pick one. I'm not telling you have to show them critical and cancer and heart attack and stroke and dental and vision and term life. Just offer something. You're going to protect your clients. I was laughing about this with my staff the other day. I don't think I've ever had anybody call me up and say, thank you for selling me that ACA policy. But I get calls all the time saying, thank you for selling me that GAP policy. Thank you for selling me that critical heart attack stroke policy. Thank you for selling me that, because that's when they use the insurance and then they don't have the bill. I get that call a lot. So any other questions? Look a little bit. If it's a guaranteed issue, yep, Allstate guaranteed issue. I love the challenge, absolutely. Do you have a template or proposal for after ACA, then separating and addressing layers? I do actually. I will pull it up and I will show you what I created. Now I just made this. You can make it. It's not anything fancy. I made it on a Word document and then I uploaded it to Adobe. I think some of you have seen this before. So I'll share my screen. It looks like this. I just made it. Put my logo. I can type in their name. And then I list their primary carrier. Around here, it's Common Ground. Let's just say it's going to $120. And then I just start filling in the secondary stuff and it will total it down here. Maybe they got the, I don't know, in pocket. And I'm just throwing numbers out there. It's 140. And then they wanted the extra accident protection above and beyond because they're going to go out of state and they're going to go bike riding. And so I'm like, all right, let's do that. It's $34. Whoops. That's good. I'm just throwing different ones on here. It's $35. And then they're going to get a $75,000 CI one. And that's, let's just say 75. Oh, they want dental too, but they want the dental, vision, and hearing with Manhattan. Okay, so this is Manhattan. And that's going to cost them, I don't know, $45. Do you have life insurance? Yeah, I got life insurance. All right. The total bill would be $415 if you buy all of these policies. I cannot tell you how many times people go, done. Every one of your clients in their head has a number of what they expect it's going to cost. This is what I'm showing them, what it will cost them to get all of the extra stuff. And they go $415. And in their head, they're like, ha, I was willing to pay $8. And you just told them how to have better coverage for less without having to buy $800 for their health insurance or $1,200 or whatever their COBRA rate is. Maybe this is $300. I don't know. I just tell them, I just go, here's your options. This is what it would cost if you take all of them. And then they go, I think I have a critical illness that I signed up for, like 10 years ago. All right. And then I just do that. I just take that off. And they see it. Because they're not going to tell you. And I don't want to know. To me, that if I walk in and an agent says, so how much are you willing to spend? I'm just going to go, yeah, no, you just want to know what my money is. You're not looking to protect me. This is me showing you what the protections are. Here's your layers of cake. I've actually said that. Like I said, I can get you a very high tiered cake, or maybe you only need 2. And they see what that rate is. So that's my form that I made. Like I said, I just made it. Show your clients, be upfront, give them the options, and let them pick. Do you ever find it's more financially beneficial for a client to get an ACA that's cheaper with the lower benefits and use the premium toward the indemnities? 99.9% of the time. Absolutely. You'll see that next week. So please tune in next week. I am going to show you why I show everybody a bronze, a silver, a gold plan. And then I also start showing them the bronze plan with the layers. It typically, not always, is less expensive than the gold. But even if it's not, often the golds have like $5,000 deductibles. There's a few that might have a $3,000 max out of pocket, but they're paying so much more. So I will show you that next week. But I think paying less for a bronze with the indemnities is protecting them more. They're paying less out of pocket for the insurance, and they're paying less out of pocket when they use the insurance. And I've said that. I'm going to give you a bronze plan with some stuff on there that's better than the gold plan. And they'll see it, and you'll see it, because I'm going to do it just as if I'm doing it for them. So Rosalind, send me an email, because I will forget about the in-pocket. And if you want that form, I can send you that form. Send me an email. Actually, I'm going to put it with when I send this out, the recording, so that everybody will have it. I will not have my logo on there, so you can certainly put in your own logo. I've edited it over the years, so feel free to Adobe Edit. If you haven't purchased a program, you should definitely purchase the Adobe with the ability to edit. My ACA flyer. Are you talking about what I just showed you or an actual flyer? Because what I just showed you, I will put on. If you're looking for an actual flyer, like a brochure about who you are, that kind of stuff, I will tell you exactly where I got mine. And I really like it. Sharon, how did I get it to how did I get that form to calculate? It's in Adobe. It's one of the things you can do. I had to learn because when I first did it, it kept doing a weird total and I realized I was calculating the total with everything else. But yeah, it's part of the Adobe forms. If you are looking for an actual flyer for yourself, a really well done flyer, here's the shop. I just stuck it in the chat. It's the North American shop. It's a print shop. They have the brochures already done. All the paperwork and the Medicare one already done. Now, the picture they show is green, but that's just because it's green. Mine is not green. My colors are not those colors. So you can go through, find the brochure you want. It could be ACA, it could be Allstate, it could be whatever you want. Medicare, you give them your name, your logo, your colors, your face, if that's what you want. So that's where I go to get my flyers and my brochures. Thank you. I have a great heart. You provided such information today. Yep. You're welcome. I really want you guys to be good agents. I want you to do right by your clients. I want our industry to be known as not those salespeople, but those caring people, you know, and we are doing it one client at a time, which also means you're gonna get clients who are never gonna go anywhere else. I'm not licensed in like 12 states or something, I don't even know, because my clients were so upset that I couldn't cover them when they moved. Okay, I kind of looked to see what the cost would be, and we have some other out of state stuff. But I don't want to, you know, it's only because they went there. You will get those clients by doing right. Which plans cover the deductible? They all cover the deductible. Remember, deductible is just part of the bill. So what happens to the tax credit if you use a plan other than silver? The tax credit is applied to all plans. The silver is only different in that if they qualify for a cost sharing reduction, that is only in the silver plan. But the tax credit's applied to all of them. In fact, 90% of our clients, unless they're in CSRs, are in the bronze plan. That's where whenever you see those ads that says most people qualify for a $0 plan, it's the bronze, it's not the silver. So the tax credit is still applied to the bronze plan. Now, if you have a lot of basic ACA, I guess we got a couple minutes left. You need a real refresher on ACA and how that works. Remember, I do have a class that I have sold. I've had people on here take it, and it will walk you through all of the basics of ACA, how it was created, why it was created, and why the marketplace looks the way it does, why the Health Sherpa is what it is, as well as cost sharings and the tax credit and all of that information. So if you are interested in that, I do have a course and it will walk you through it in great detail. Remember, there's only September, which has only got 4 Thursdays, and then October, and then there's no more classes for open enrollment. And unless you are in my specific downline, I'm kind of like incognito. You can certainly send me a question, but I won't get to it quickly. I have a lot of clients to enroll myself, but I will be happy to help when I can. Any questions for anybody? There's my course. Shoot me an email. Otherwise, thank you very much for tuning in today. Appreciate it. Next week is kind of just how I run my appointments, and we'll go from there. Have a wonderful day, everyone.